The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker. I'm Hongbin Jeong. Sim Lian Land and Sim Lian Development joined forces to submit what property consultants have called a bullish highest bid for the inaugural government land sales site in the newly developed Holland Plain precinct. Now, the pair's bid of nearly 368.37 million Sing dollars for the 99-year leasehold private residential site translates to approximately 1,432 Sing dollars per square foot per plot ratio. Now, this amount was 22.2% higher than the second highest offer of about $1,171.70 per square foot per plot ratio submitted by a wholly owned subsidiary of WeHer. So what factors motivated Sim Lian's bullish bid? How does this tender outcome reflect current market sentiment? And what might this mean for future land sales and residential property prices? Well, to find out more, joining me now is Nicholas Mak, who's a Chief Research Officer at MOGUL SG. Nicholas, welcome to the show.
Thank you for having me.
Thank you so much for joining us. Well, Nicholas, how would you interpret Sim Lian's aggressive bid for the Holland Link site? Does it reflect broader developer confidence in the private residential market?
Well, I have to say that one solo doesn't make a summer. If we look at the spread of the bids in this particular land tender, the top bid is 22.2% higher than the second one, but the second, third, fourth, and fifth bid pretty close to each other. Now, we must understand that the government land sale tender system is through the closed envelope system. That means you do not know what your competitors are prepared to pay. And each developer's bid is basically a reflection of their valuation of the site. That's a maximum amount that they are prepared to pay for that piece of land. So perhaps some developers might be more bullish because they want the land for various reasons, such as maybe they run out of land in their land bank and they need the land to basically build the next project so as to keep their business going. So they may be prepared to pay a bit more than their competitors. And sometimes they may be prepared to pay a lot more just to make sure they got a good chance to win the tender.
Right. Well, property consultants have described this as the bullish top bid for the maiden government land sales site. Would you say the same?
Well, I'll say that they probably take a calculated risk when they submitted this bid. Yes, it is a bit more bullish because if we were to compare it with another piece of land around the Holland area, such as at Holland Drive, which is very near, within less than 5 minutes walk from the Holland Village MRT station, that was sold to another group of developers that's now currently constructing the site. That bid is at $1,285 per square foot per plot ratio, which is the Sim Lian's bid is 11.4% higher than the other one. And this particular site at Holland Link is not next to any MRT station. It is, in fact, a few kilometers, so about 3.7 kilometers by road from the King Albert Park MRT stations and a bit further from the 6th Avenue MRT station. So it's not really next to that. And if we were to compare with another piece of land, the Chuan Grove one, which is somewhere outside the core central region, and that piece of land is even was sold at $1,376 per square foot per plot ratio, and Sim Lian's bid is 4% higher. So Sim Lian's bid is higher for a piece of land that's not next to an MRT station.
Right.
It seems like what we're seeing is developers are prepared to pay more typically for land that is next to MRT station, regardless of whether it is in the CCR or in the suburban areas.
So given its location in a GCB area with no immediate MRT access, is this price justified, Nicholas?
Well, I say that if we want to see something that the other developers are prepared to pay, the other developers may deem that is a more measured, a more balanced kind of price. So I think that Sim Lian did a calculated risk because they properly factor in their construction costs and made modest profit margin, and they can probably sell the new project at about $2,700 to $2,800 per square foot about 1 to 1.5 years from now and still make a decent profit. So that price At that price, probably, I think there will be buyers who are willing to accept that price so they can. And the other thing is, yes, Sim Lian had a very successful project called Admiral at Katong, which was, I think by today, it's all fully sold. And they probably need another piece of land to build their next project other than executive condominium. So they want something that's in the core central region. That may be why they are prepared to pay this particular land price that we see today.
Okay. Well, both the number of bids and the top offer were higher than what property consultants polled by the Business Times earlier this week had forecast. Now, they had expected the site to draw 0 to 4 bids, with the highest offer projected to be in the range of $900 to $1,300 per square foot per plot ratio. So what does this tell us about current sentiment among developers, especially amid high interest rates and ongoing macroeconomic uncertainties?
Well, I think that probably developers and perhaps some economists are expecting interest rates to gradually trail downwards. I think the economists are expecting probably the Federal Reserve to start easing interest rates sometimes perhaps later this year. And another thing is that the negative fallout from the US trade war seems to be that risk seems to have abated, because with all these trade deals that seems to be announced, or rather framework of trade deals that are announced before the 1st of August deadline,
Right.
I think that now the risk appetite is coming back compared to when the analysts were making their forecasts a month or so ago. So right now, developers are a bit more bullish. Another reason is that as long as a project is priced correctly, there will be buyers. And what we saw last weekend for example, 2 weekends ago, like Lindenwood, we sold very well, is that buyers are there. They are sitting on the sideline and just waiting for the right project at the right price to come along. Therefore, we are seeing that developers are also trying to gear up for that momentum, and they are buying land from the government.
So who do you think the target buyers would be for a future development here?
Well, I think we're going to have a wide range, because the number of housing units that can be built on this land is capped by the government so as to prevent traffic congestions along the narrow road. So I think the units will not be very small, and I think one bidders may not really work for this project. So it has to be 2 bidders upwards, which means that majority of the buyers will be families. There could be some investors who expect close to 90 to 93% of the buyers could be Singaporeans and permanent residents. And the other thing is because there are some popular schools nearby, so we also expect another possibility is families with young children. So because of all the top schools that are located around the Bukit Timah area, this could be the housing project on this site could also attract such buyers, families with young children.
Would this also, if this bid of nearly 368.37 million Sing dollars goes through, what would this mean for, property prices around that area?
Well, I think that if we were to factor in or what the developer could be launching this project at, which is just something shy of the $3,000 mark, it is now becoming more acceptable, especially for 99 years project in the prime districts. But we must also remember one thing is that the entire core central region is not a monolithic entity. There are different sub-markets within the high-end housing segment. There are some locations maybe nearer to Orchard Road. There is one market segment, and some maybe, for this particular one, is actually somewhere in between Bukit Timah and Holland Village. So that's another sub-market. So what it says is that this particular sub-market, in the next 1 year or so, we can expect probably a new residential condominium there to be selling around the range of $2,700 to $3,000, maybe even $3,200 per square foot. So it's going to set a bit of benchmark in the future. And as for this land rate, the $1,432 per square foot per plot ratio, that is going to be used as a reference point for future land sale in the core central region.
All right. Well, then, is this bid sustainable from a profitability standpoint?
I think it still is. I think because all developers are businessmen, right? They are basically profit maximizing entities. They have to take certain calculated risks in order to profit. And I think so far, as long as the market in its current trajectory and we don't encounter, like, for example, a drawn out recessions or another financial crisis, I think buyers' demand will still be there. And so developers, as long as they price their project reasonably, they should be able to sell the entire project within that 5-year time period that every residential project actually allocated. So, well, now it's just the first year. They have another 5 more years to go. I think it is quite sustainable.
Right. But how might this outcome, influence bidding strategies for upcoming GLS sites, including those in more fringe or OCR locations?
Well, I think the strategy is always about the same, because as long as the government use the closed envelope system instead of open outcry auction system, developers will always be trying to outguess each other how much they will be willing to bid. Some may be willing to bid at a more conservative level if they are not very hungry to buy the land. Others may bid at a more moderate level, that means more reasonable level, because perhaps they would like to have the land, but they are not prepared to overpay for it. But because the closed envelope system, there's only one winner. You can have 5 bidders, like for example, in this land tender, but you only get one winner. There is no prize for second place. Therefore, the party that is very eager to acquire this site will have to pay more than what he believes his competitors are going to bid for. Therefore, we will continue to see such bullish side as long as the market continues to carry on, where buyers are prepared to, where on the first weekend of the launch, some projects could sell over 60-70% of the units. Yeah, we are going to see this phenomenon at least in the short term.
Wow. Well, overall, Nicholas, does this signal a possible rebound in the high-end private residential segment?
I think it's already happening. It's already started to happen. However, if any developer, were to price their project, it could be in the high end or it could be in the mass market, if they were to price it too aggressively, that means too high, buyers have choices. Buyers could always turn to other projects. There is basically almost more than 10 residential condominiums lining up to be launched, and they could be launched in the next 6 to 12 months. And many buyers probably could only buy one, or I'm talking about household, could buy 1 to 3 projects, one for their own stay, the other 2 homes could be for investments at most, before they have to start paying ABSD and such. Therefore, developers have to price their project quite reasonably. Otherwise, they could be overshadowed by the next launch that will come along.
Some great insights from you there. Thank you so much, Nicholas, for joining me today.
Oh, it's always a pleasure.
Thank you. We've been speaking with Nicholas Mak, who's the Chief Research Officer at MOGUL SG. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.